Forget the internet noise. Forget the unverified forum claims, the speculative countdown clocks, and the endless "it's happening by Thursday" posts. If you are looking for real, verifiable signals about where Iraq's financial architecture is heading, you need to stop looking at rumors and start looking at institutional structure. Right now, behind closed doors, three massive international tracks are converging simultaneously. Iraq's World Trade Organization Accession in Geneva, the central bank of Iraq's complete digital infrastructure transformation. And critical regulatory movements inside the United States Congress. This convergence is not accidental. It is not a coincidence. And most importantly, it represents a permanent structural shift that changes how we read every single document coming out of Baghdad today. In this video, we are bypassing the hype. I am not going to give you a fake date or a speculative promise. Instead, I am laying out the documented, verifiable facts that prove Iraq is actively entering its final integration phase into the global economic framework. Make sure you stick around for part 4, because the U.S. legislative side is moving far faster than anyone is talking about. Let's break it down. Let's begin with a development that almost nobody in the retail space is giving proper weight to. Iraq's official delegation at the World Trade Organization in Geneva. Senior officials from Iraq's Ministry of Trade did not just attend a casual meeting. They engaged in high-level technical negotiations with senior WTO leadership to prepare for the critical 4th round of accession talks. Having cleared 3 previous rigorous rounds, WTO officials explicitly commended Iraq's speed in satisfying complex legislative and trade requirements. Why does this matter to you as a market observer? Here is the economic reality. No nation can operate a globally recognized, internationally tradable currency at scale while remaining outside the WTO framework. WTO compliance is not just a diplomatic badge of honor. It is a mandatory prerequisite. It proves to international central banks, global clearinghouses, and foreign investors that your legal system, tariff structures, and banking mechanisms meet world-class standards. Iraq closing the gap on full WTO membership is not a side detail. It is one of the final institutional boxes being checked right now in real time. However, international trade approval means nothing if you don't have the internal financial plumbing to back it up. And that brings us to our second track, the Central Bank of Iraq's internal digital payment overhaul. The CBI has quietly shifted away from cash-dominated settlement systems toward a fully integrated electronic payment network that enforces international anti-money laundering and cross-border compliance standards. For years, critics argued, even if Iraq wanted to execute a major currency revaluation, how could they process mass transactions without massive systemic fraud? The answer to that question now exists. Over the last 2 years, Iraq has deployed an immutable, highly transparent electronic settlement architecture designed specifically to track capital flows, verify transaction integrity, and instantly flag bad actors. By mandating cross-border digital compliance, Iraq has effectively eliminated the structural vulnerabilities of the past. They haven't just updated their banking software, they have built an enterprise-grade financial system ready to interface seamlessly with global markets. Now let's connect the third piece of this braid, one that is happening thousands of miles away on Capitol Hill. The acceleration of U.S. financial regulation and cross-border asset legislation. As the United States Senate advances comprehensive financial clarity frameworks to define digital transactions, commodity classification, and international settlement channels, it is actively building the legal runway required to interface with modernized foreign central banks. You cannot have a fully compliant, digitalized central bank in Baghdad trading with global entities if the United States lacks clear regulatory standards for modern transaction mechanisms. The US is systematically closing that legal gap, removing a massive friction point that previously stalled. Cross-border financial integration. Layered on top of this economic alignment is a vital geopolitical reality. Iraq's leadership is no longer viewed as a passive bystander. It has become a central diplomatic bridge in the broader Middle East realignment. A country trusted with major regional diplomatic initiatives is a country that Western powers have a direct vested interest in stabilizing economically. Stability, international trade, modern plumbing, and legislative alignment all moving in lockstep. Let's pull all of these threads together. When you look at Iraq today, you are not looking at the fragile economy of 5 or 10 years ago. You are looking at a sovereign nation whose WTO accession is entering its advanced stages, whose central bank has operationalized global banking compliance, whose major trade partners are finalizing regulatory frameworks, and whose geopolitical standing is firmly established. None of these facts are based on rumors, secret intel, or anonymous internet claims. They are documented, verifiable facts confirmed by official international bodies. So, what is your strategic move right now? First, stay grounded. Do not fall victim to emotional cycles or unverified timelines. Second, focus on preparation. Keep your personal legal documentation organized. Understand the institutional mechanics of liquidity events, and consult licensed financial professionals ahead of time. True wealth planning happens before systemic shifts take place, not after. The groundwork has been laid. The structural foundation is built. Stay disciplined, stay informed, and remain prepared. If you appreciate factual, research-driven breakdowns that cut through the noise, make sure to hit that subscribe button, turn on notifications, and share your thoughts in the comments below. I'll see you in the next breakdown.